Well, hi everyone, and welcome to the Buffett and Beyond Research Saturday Market Recap Letter for March 16th, 2024. And remember, if you want to live on the beach like Jimmy Buffett once did, you've got to learn how to invest better than Warren Buffett does now. And this week, well, another crazy week as the indices all have their intermediate term indicators pointing down as of Friday afternoon. The Dow and the QQQs have broken their respective 20-day moving averages to the downside. Not a good sign, folks. In our weekly stock analysis video, Palantir is a forecasting crystal right out of Lord of the Rings. But the stock, Palantir, is also forecasting doubling the earnings of 2023 for this year, 2024. In our ETF video, we look at the materials ETF as it has been in the news lately, along with the finance ETF, but it's been performing nicely recently. But over the long term, we look at three ETFs that are not only hedged, but almost doubling the returns of the S&P, and they are all outperforming the materials sector by a long shot. All right, let's look at the S&P 500, and here we are sitting right on top of the 20-day moving average at the 5,100 level. And folks, that's the level that we have to look at this coming Monday. So in other words, we were at the top of this band, the volatility band, and finally broke down to the 20-day moving average. But look what happened every time we went down to the 20-day moving average. It bounced back up above it. Right in every place here, including this place. It closed one day below it, down here 2 days below it, and then bounced back up again all the way to this area right in here. Problem is right now the intermediate term indicator is pointing down. And when we look at the S&P 500 on the candlestick chart, we can see this 20-day moving average being not broken, but sitting right on top of it. We get a better look at it, and we have this little double top up here, and then down here, this is the indicator that we showed you in the last slide, starting to point down. Now, the Dow Jones Industrials has broken below that 20-day moving average. So that's not a good sign here, folks. And you can see that all along over the past month or so, it has been the weaker of the indices as we take a look at this intermediate term indicator down here. And when we look at the QQQs, well, we see it broke down below its 20-day moving average on the way down to the 50-day moving average. And you can see down here, same as the Dow, it's been trending downward as we go on. And it's really happened in about the middle of February where it broke below it, broke above it just slightly in here, beginning of March, and now heading down once again. Now, one thing I want to show you here, these are different moving averages, and we just want to show you that as we go along this particular moving average, and when the market breaks through both moving averages, there's a pretty big change in direction. So let's start all the way back here. When it broke through both of them, we had a pretty nice decline after that. Then when it broke through up here, we rallied again and then just kind of held out, and finally this red line crossed this blue line, and that gave us the signal that said, okay, we have a bigger problem in here. But ever since then, it's been going up, coming down to this average, going up, coming down to it, going up, coming down to it. The problem is right now we have this indicator pointing down on us. And we also see these red vertical lines in here. Well, that is that represents the volume on the down days, and you see more red in here than green. Green represents the volume when the market or this particular index closes up, and we see more red than we do green. And our portfolio protection, well, the March 15th SPDR, our 410 put, expired today, or I should say yesterday, and we went out, we put out an alert that we are buying the June 21 SPY 425. You can see that we are moving up as the market gets higher. Then we move these disaster insurance or insurance below about 12% of the market. So this is so you can sleep at night. We call it disaster insurance because if the market goes down below 10% or 12%, then these become worth actually a lot of money. So we keep buying these puts just in case, folks. And well, again, we had a not so good week this week. We had the market down more than it was up, and the market closed down for the week, and we can only wait until Monday. So it's the weekend. Take the day off. Happy St. Patty's Day out there, folks. Be with your family, be with your loved ones, have a Sunday dinner with everybody that you love. And folks, you go out, clear your head, you stay safe, and we'll see you right back here on Monday.